都代表的不同的产业、专业还有国家，我们都共同的宣示，台湾是一个合作的平台，也是连接的桥梁。今天有非常多的国际贵宾远道而来，非常欢迎，还有衷心的感谢大家的与会。紧接着呢，我们要进入的是今天的专题演讲哦。我们首先会由全球最大的资产管理公司之一贝莱德的副主席 Sir Robert Fairburn 来发表演说，从国际的视角来剖析深入全球金融的韧性趋势之下，台湾市场所蕴含的契机。请各位一起以掌声来欢迎贝莱德集团副董事长 Sir Robert Fairburn。
Well, that's quite a start to this incredible event. I think you can already declare this conference this week a huge success after that event. So amazing. Ladies and gentlemen, distinguished guests and friends, allow me to begin by expressing my extraordinary gratitude on behalf of BlackRock and myself for the opportunity to join you at this auspicious gathering at the beginning of Taiwan Week. My name is Rob Fairburn, and I'm Vice Chairman of BlackRock. I've been at the firm for 32 years, and to stand here in front of you now with where your market is, the importance of Taiwan in this changing world, is indeed a great honor. When my team prepped me for this visit to Taiwan, I was absolutely amazed to learn that Taiwan's exports this year have soared by nearly 30%. At my heart, I'm British. I live in America. But I can tell you, if you're living in London, 3% is a great year. 10% would be extraordinary. 30% would be nothing short of an industrial revolution. I know some of this momentum is due to the relentless global demand for semiconductors. Still, a 30% surge in exports for an economy of Taiwan's size is nothing short of remarkable. The explosive growth cements Taiwan's role at the heart of the AI revolution. It also powers real wealth for Taiwanese families and businesses, which of course in turn calls for a dramatic evolution, indeed a revolution, in asset management. It is therefore my great honor to address this audience because we share your vision of nurturing an ecosystem that contributes to building Taiwan into a dynamic, reliable, and powerful asset management hub for Asia. I want to share for a few minutes how BlackRock is helping clients and partners steer through today's markets, reinvent asset management through innovation, with of course the ultimate goal of helping more and more families and people around the world achieve financial well-being. Every client I've met this year, and I have the privilege of traveling all over the world, from governments to family offices, is riding a roller coaster of excitement, but also anxiety. The buzz is all about technology, especially generative AI. This isn't just a Silicon Valley or a Taiwanese story anymore. To give you a sense, software and IT hardware spending alone now adds a full percentage point to US GDP growth. That's outpacing even the internet boom of 20 years ago. Both companies and consumers are harnessing AI to upgrade the way they operate and, of course, discover new opportunities. But let's not ignore the flip side. Soaring public debt in developing markets, such as the US, the UK, and France, are now sitting at their highest debt-to-GDP ratios in decades, and there's no obvious fix. So here's the challenge. Phenomenal AI innovation needs infrastructure to provide power and data connections, but governments are strapped for cash. Such infrastructure projects for AI development could deliver stable, robust returns, sometimes double-digit returns, over 20 to 30 years, and often inflation protected. Naturally, private investors want in, but most simply don't have the deep pockets nor the expertise to build billion-dollar nuclear plants, power stations, and of course, data centers. That's where asset managers like BlackRock and many of your great players here in Taiwan come in. Asset managers like us are set up to democratize these opportunities and open them to everyone. On our platform today, we already offer mutual funds and ETFs that give exposure to the AI ecosystem. Tech firms, digital infrastructure, hardware manufacturers, energy producers, and more, with the acquisitions of leaders like GIP, Global Investment Partners, HPS, one of the world's leading private credit managers, and Preqin, the leading data provider for illiquid assets. We're also working to make private markets more accessible to a broader range of investors. At the same time, just over a year ago, we started an infrastructure partnership arrangement with companies like Microsoft, MGX, NVIDIA, and XAI to invest in building data centers and energy infrastructure to fuel the AI wave, both in the US and around the world. BlackRock also believes that over time, every stock, every bond, every fund, every ETF can be tokenized. We're pioneering the tokenization of traditional assets to allow fractional ownership, so even billion-dollar infrastructure projects can ultimately be accessible to more and more investors. A great example of democratizing investing. So what do these innovations mean for investors in Asia? Most of our clients here have US equities at the core of their global portfolios. For years, it's been the obvious choice. American companies have delivered returns on equity of around 18% in recent years, compared to 14% in Europe and just 10% in Japan. We remain bullish on US companies. Their innovation, market reach, deep capital pools, and breadth of talent remain unmatched. But investors from Europe to the Middle East, and of course here in Asia, are seeking more diversification to stay closer to growth opportunities in the home markets, manage currency risk, increasingly volatile this year against the US dollar, and of course, increasingly match assets of local liabilities. Here's part of the answer. Private investments. The right portfolio approach may look more like 50% in stocks, 30% in bonds, 20% in private assets, infrastructure, private credit, real estate, moving away from the traditional 60-40 global balanced portfolio. Private assets, especially those in Europe and Asia, help non-US investors better match assets and liabilities. Take our infrastructure debt strategy as an example. It already finances projects like power grids, transport in India, 5G and IoT networks in Europe, and smart city facilities in the UK. These type of infrastructure debt structures offer long investment horizons, resilience through market volatility, and are backed by powerful global trends. Our research shows wealth managers outside the US should consider allocating up to 10% to private markets, ultimately even more, up to that 20%. We've certainly seen that happen in many family offices and certain institutions around the world. Why shouldn't that be the case for individuals? Tokenization, as I've explained, should over time give investors access and liquidity to integrate such private investments into their portfolios. Another upgrade, locally listed ETFs. These are denominated in local currencies, removing FX risk and costs. They're also tax efficient and designed to slot straight into domestic portfolios, perfect for insurance and retirement accounts. Asia Pacific is leading the charge in ETS growth, with assets growing at 16% a year over the last 5 years, compared to 10% in the US and 11% in Europe. Of course, as many of you know, here in Taiwan, the market is even stronger, expanding 35% annually, really leading the world's growth rate. This makes Taiwan's ETF market not just dynamic, but a powerful platform for building portfolios focused on retirement or indeed income. And finally, digital assets. In January 2024, we launched our flagship Bitcoin ETF strategy. Last week, that strategy went through $100 billion in assets under management. Of course, the question is how much Bitcoin and digital currencies should come into your portfolio. Let's be clear. Bitcoin is still a risky asset. It's volatile, and it's navigating a fast-moving, evolving regulatory landscape. Prices crashed nearly 80% in Bitcoin alone in 2022. But here's the upside. Bitcoin's performance and its behavior and the risks do not mirror those of other assets in clients' portfolios. So even a modest allocation can add tremendous value in portfolio diversification. Bitcoin is just an example of digital assets with increasing weight in typical global portfolios. So let's circle back to Taiwan's extraordinary export and economic growth. Taiwan's real strength lies in robust governance, cutting-edge technology, and its openness to global capital. The economy and markets are tightly linked to global megatrends, especially AI and digital transformation. This gives Taiwanese investors a front row seat at the intersection of technology and capital. BlackRock has deep roots here. Over 2 decades, starting with Merrill Lynch Investment Managers, where I joined BlackRock from. 25 years ago, we launched an ETF in the US which tracks the Taiwanese index. It now has assets of over $6.5 billion. BlackRock as a whole owns just short of 5% on behalf of its clients, just short of 5% of the Taiwanese stock market. We are massively vested here. We thank you for all your efforts to improve the capital returns for our investors around the world. This coming Monday, we're extremely excited. We're going to list our first iShares ETF in Taiwan, once again connecting Taiwanese and US capital through the iShares $5 trillion global platform. Our goal is to build what we call the prosperity wheel, providing investors easy access to capital markets and flowing the success of companies and industries from capital markets back to investors. Taiwan's policymakers are building an asset management hub with a careful, forward-looking regulatory touch, encouraging innovation while protecting investors from speculation. Hand in hand with policymakers and partners here, BlackRock is extremely excited to build out the prosperity flywheel of capital markets for Taiwanese investors. Here's to the resounding success of the Taiwan Week and to many more years of dynamic capital markets and economic growth in Taiwan, for which BlackRock is deeply grateful. Thank you.
Thank you once again to Sir Robert Fairburn. 谢谢 Sir Robert Fairburn 的分享。Thank you. 接下来我们非常荣幸能够欢迎渣打集团大中华暨北亚区行政总裁及全球财富管理及消费金融行政总裁徐仲威女士 Judy Xu， 让我们一起掌声欢迎。而徐女士呢，在银行业有超过30年的经验，在零售银行、财富管理跟制定富裕客户的策略方面都有相当丰富的资历。今天将跟我们演讲的主题为启动台湾无限潜能，引领亚洲资产管理未来。